Imagine strolling through the bustling streets of Tokyo, brushing past countless faces without a second glance. You walk past this individual in the packed streets of Shibuya without a second glance. Yet, with the click of a button, he has the remarkable ability to influence financial markets, turning a small investment into a fortune, only to come perilously close to losing it all earlier that day. This is his story. The stock market is undoubtedly the most popular financial market in the world, but it is also one of the most complex and complicated market systems in the world. There are thousands of assets transacted every day. It takes a real genius to understand how the market works. In addition to the diverse assets being traded, it is imperative for analysts and traders to have solid analytical skills, deeply grounded in mathematical and economic principles, with a keen understanding of trader psychology. For example, Louis Ranieri is widely recognized as the pioneer of mortgage-backed securities. His innovative concept of transforming tranches of mortgage debt into tradable securities is nothing short of brilliant. For a long time, trading mortgage-backed securities was the backbone of the American financial sector. Other notable individuals who have contributed to the decades-long success of the stocks and securities trading include Warren Buffett, former world's richest man; Ben Graham, who is considered the father of securities analysis; William H. Gross, often referred to as the king of bonds. Maybe you took notice that all the people I have mentioned have a few things in common. They are all old people, went to prestigious schools, and were academically trained to work in finance. Good retail traders are a rare breed. Trading being the most difficult and competitive field there is, retail traders stand little to no chance to even turn a small profit as they battle against banks, pension funds, and hedge funds with their army of PhDs. Amongst the fraction of retail traders that are profitable, not many can claim to have turned a modest investment into generational wealth. Now imagine a solitary trader who turned $16,000 into $153 million in less than a decade from the confines of his messy bedroom. Operating under the pseudonym B&F, Takeshi Kotegawa is considered the god of Japanese day trading. Takeshi Kotegawa was born on March 5, 1978 in Ichikawa, Chiba, Japan. He reportedly started trading stocks on the Tokyo Stock Exchange in the bear market of 2001. Takeshi moved to the city of Osaka, Japan when he was 20 years old to attend college. It's not very clear what his life was like before that time. He didn't come from money, and like the average college student, he was low on cash. So, one day, while he was in his apartment in Osaka, Takeshi came across a fascinating program on TV that discussed the complex but very interesting art of trading stocks and futures. He was fascinated by how well the market is structured and how he could use it to his advantage. NHK, a Japanese TV network, aired a 4-part series about the world of finance. With the first episode titled The Man Who Lost 50 Million, the episode covered the legendary hedge fund manager Victor Niederhofer, which became a huge inspiration for him. But this man was an unusual inspiration because he lost much of his investment in a single day, about $50 million. Still, Takeshi was fascinated with the man's life, so much so that he decided to adopt the man's initials as his own pseudonym. In Japanese, the V sound doesn't really exist, so Victor would be known as Binkta, and he chose the letter N and F from the man's surname to form the pseudonym B&F, a pseudonym that would come to be recognized and maybe even feared by the world of finance and trading. From early in his trading career, B&F understood that breaking into the market as a retail trader would not be easy. He had no knowledge of stocks or any kind of securities trading. So right there in college, whilst his classmates were partying, he devoted most of his time towards self-development and his new passion. He understood that he would need seed money to begin his investment journey, and so he began to study and work part-time. He combined schooling with learning all there is to know about trading from textbooks and working to raise some capital. Having a couple of years in this routine, he managed to save up to 2 million yen, about $16,000 at the time, from his odd jobs and personal savings. He had become a self-taught trader and analyst. Many can trace B&F's entrance into the market to sometime around the year 2001, but his passion began some 10 years earlier. The long stretch of time between 1991 and the year 2001 was a remarkably unfortunate time for the Asian markets, especially for traders out of Japan. The market was in a serious bearish phase for a long time, and it seemed like it wasn't going to end. Many would come to call that period the lost decade.
Government of Japan land use policy.
Government incompetence was a factor.
We should be telling Japan, run a giant budget deficit if you have to, but get your economy moving.
The Bank of Japan and the Ministry of Finance responded sluggishly at the start of the crisis, wishfully thinking that the economy would right itself and the financial problems were not as bad as they seemed.
The lost decade refers to a period of economic stagnation in Japan that began in the early 1990s and lasted through the 2000s. Following the burst of an asset price bubble in the late 1980s, Japan experienced a prolonged period of deflation, slow economic growth, and financial instability. During this time, asset prices, including real estate and stock market values, plummeted by over 70%, leading to a decade of economic hardship and minimal growth. The term is often used to describe the challenges Japan faced in recovering from this economic downturn. The continued bearish trend in the market wasn't exactly optimal, particularly for a newcomer like BNF. The medias at the time constantly reminded people that this sector was in serious crisis. It is safe to believe that most newcomers would panic upon an observation of this fact, but not BNF. He insisted on making the system work for him and took advantage of the bearish trend. Ever since he became popular in the financial sector, analysts have been studying his trading patterns and strategies. Everyone wants to know how he chooses what assets to invest in or bet against, and with good reason. Turning $16,000 into a fortune of $153 million in less than 8 years is no small task. One of his first strategies was contrarian investing. Contrarian investing is a strategy where an investor goes against prevailing market trends by buying assets that are performing poorly and selling those that are performing well. The idea is to capitalize on market overreactions, where prices may have been driven too low or too high by emotional trading. Using this strategy, he would pick a stock, usually one experiencing a bearish trend, and watch it closely on a 25-day moving average. If the stock dips below 20% in that period, he decides whether to buy or sell the stock depending on the market trend. If only it was so simple. If you've been trading for some time, you recognize that this strategy is not foolproof. One is bound to lose, and in a big way. And that is what happened to BNF at first. He decided to revise his strategy. Instead of thinking like an everyday trader, he adopted an investor's mindset. He began to do some reading. Before choosing a particular stock, he would do extensive research on the stock itself and the industry the stock was associated with. By studying the origin of each stock, he was able to conduct effective predictive analysis. Apart from this, he devised a different methodology for each stock, instead of choosing a general rule for all. He then started seeing the result of his hard work and started making real money. In the words of Harold Finch to John Reese in the popular TV show Person of Interest, Takeshi Kotegawa is a really private person. He is what you would expect from a reclusive, wealthy person. One of the most outstanding qualities that BNF has exhibited over the years is a strict adherence to his core principles and strategies. For example, in 2001, the Tokyo market began to plummet even further, and many traders were dumping their positions, but not BNF. He recognized that changing his moves would mean abandoning its core principles and strategies. So for him, it wasn't about losing money. It was about finding what works for him and sticking to it. His decision aged very well, because in just under a year, his patience paid off, and he was able to turn about $16,000 to over $1 million. For new traders, achieving this feat in such a short time would be enough. Some might even take a break and try to enjoy themselves. Not BNF. He did the exact opposite. He prepared himself for the next step in his journey, taking advantage of the bullish trend. In 2002, the emergence and widespread use of the internet became something that greatly affected the market. More than ever before, the market saw more individuals become millionaires. At the time, they were known as .com millionaires. These people forced a shift in the market, and a bearish trend quickly turned into a bullish run. This change wasn't exactly favorable to BNF. For the past year, he had been acquainted with and profited from the bearish trend. But this new trend in the market was not his regular pattern. He decided to adapt to the new trend and change with the evolving times. So he adopted new strategies to face the new realities. At the time, he began to study the stock market again and watch how established companies behave. He saw that although there was a steep rise in the value of many companies' stocks, they all didn't rise at the same time. The trend was that when one company appreciated in value, that company used its new revenue to buy a new stock, which would also appreciate in value, and the trend continued. Seeing this, BNF was able to predict which stock would rise next based on the activity of an appreciating stock. Instead of waiting as he had done in previous years, he trusted his screening analysis and gut instincts to buy into the stock in anticipation of a rise. This strategy was indeed brilliant. In just 2 years, his net worth went from $1 million to $11 million. But the best was yet to come. In the year 2005, a notable event unfolded when a Japanese company named Jcom proudly announced its initial public offering, marking its transition to a publicly traded entity. However, amidst this significant milestone, an unfortunate error occurred. An employee at Mizu Bank, the financial institution servicing Jcom, made a grievous mistake that cast a shadow over the celebration. He was instructed to sell one share of the company for 610,000 yen, but he got it backwards. He sold 610,000 shares of the company for 1 yen. This mistake is commonly known as a fat finger order. The value of the company tanked, as the value of the shares of the company were ridiculously low. Many traders who saw this were apprehensive and decided not to get into the stock, while many were gripped by the fear of further declines and the perilous risks of catching a falling knife. BNF had a unique perspective. He recognized the transaction for what it truly was, a mistake, and took full advantage of the opportunity. On that fateful day, he invested 7,100 worth of shares, securing approximately half of the company's ownership rights. This decision was fraught with risks, as he allocated nearly his entire portfolio to a single trade. Had the trade turned unfavorable, he would have faced financial ruin. Witnessing these events, both Mizu Bank and Jcom felt compelled to negotiate with BNF to repurchase some of the company's shares. This repurchase came at a significant cost, with the bank agreeing to buy back shares at roughly 975,000 yen each. The total amount paid to BNF was an astounding 2 billion yen, approximately $15 million at the time. This singular, high-stakes trade not only marked BNF's most notable transaction, but also earned him widespread recognition and the moniker Jcom Man. Immersed in the world of anime and video games, he spent most of his days in solitude, meticulously day trading from his room. Even after making an astonishing 2 billion yen in a single trade, BNF remained unfazed, calmly and methodically searching for his next significant opportunity. Like every compelling narrative, the hero doesn't always triumph unchallenged. Eventually, he faced an obstacle. After his successful venture with Jcom stocks, he ambitiously sought to expand his investment horizons beyond Japan, hoping to replicate his earlier achievements. This ambition led him, for the very first time, to the New York Stock Exchange, where he pursued new and promising investment opportunities. In 2008, the financial landscape was marked by unprecedented turmoil and widespread chaos.
All right, we're in bear market!
To provide some context, let's revisit the concept of mortgage-backed securities, which had long served as the bedrock of the American financial system. Over the years, the quality of these securities diminished as the supply of high-quality mortgages dwindled. In response, banks and lenders began to issue subprime mortgages, bundling them with a few high-quality loans. They then sought favorable ratings from agencies like S&P Global Ratings and Fitch Ratings to make these subprime securities appear more appealing to investors. This deceptive practice contributed to what is now infamously known as the housing market bubble, or the subprime bubble. The outcome was a catastrophic collapse in the American financial market, leading to an unprecedented economic depression that affected not only the United States, but also numerous neighboring countries. This crisis resulted in widespread job and home losses. Financial institutions went bankrupt, and some traders faced imprisonment. Among the banks impacted was Lehman Brothers.
The buyers are looking at Lehman. Lehman is now desperate to sell. Whether it sells the entire company or sells some of its key assets, it looks like a full takeover and breakup is very likely,
marking what is considered to be the most expensive era in BNF's entire career. BNF tried to repeat the strategy he used back in 2001 in the Japanese market, where he maintained a bullish outlook despite the popular trend. Many had been dumping their stock in the housing market, many of which included the stocks of Lehman Brothers. The bank's value tanked, and its future was looking bleak. BNF considered the history of the bank, and he believed that a bank with the pedigree of Lehman Brothers wasn't just going to go down. It was too big to fail, that the market was just overreacting. He believed that it would resurge after some time, and so he decided to invest some money into the bank. His investment was said to be about $6.5 million, and he waited for the bank to respond favorably to the cash injunction, but it was too late. Lehman Brothers was beyond saving. After some months, the bank foreclosed, and BNF completely lost his $6.5 million stake. In an effort to clear his mind and find some solace, he decided to take a walk through the bustling streets of Shibuya. So, with money lost and lessons learned, he returned to the Japan market humbled by the experience, wiser, but poorer. He soon realized that the Japanese stock market was significantly impacted by the downturn in the US economy. Many of Japan's leading companies were grappling with substantial losses, with some experiencing such severe devaluation that it took years to recover. Amidst the chaos, numerous traders were in a state of panic, struggling to find profitable opportunities. However, BNF chose to brave the turbulent times with unwavering perseverance. He maintained a sharp focus, diligently monitoring stocks with potential for growth. Ultimately, his strategy proved successful, yielding a remarkable profit of over $12 million as he re-engaged with the Japanese stock exchange. Over the past decade, BNF has consistently maintained a discreet presence in the stock market. Nevertheless, it has been noted that he predominantly invests in companies listed on the Japanese stock exchange. In certain instances, he may hold stakes exceeding 5% in these companies, effectively exceeding significant market influence. It is estimated that BNF's net worth is approximately $1 billion now. Although he has never confirmed this claim, there are compelling reasons to believe it is accurate. In Japan, it is a mandatory policy for all publicly traded companies to publish a comprehensive securities report detailing their financial status every 6 months. These reports also include a list of the company's major shareholders. When these reports are released, you might notice prominent names in the Japanese financial sector, as well as international investors such as JP Chase, among others. Interestingly, you may also come across the name Takeshi Kotegawa among the major shareholders. From 2014 to the present, Takeshi Kotegawa's name has appeared in the reports of approximately 20 different companies and brands, including Cookpad, Image One, and Falltech, to name a few. Image One is a Japanese company known for dealing in the sale and importation of computer software, and widely recognized by investors for its volatility. It is also one of the companies BNF invested in 2014. During that time he invested, the company surged in value at over 100%. It surged again much recently in 2021, but it seemed like he was already out of the picture after selling his 3% stake in the company. It is believed that he made tens of millions of dollars from that single trade. Although it appears that his interests now lay more in real estate, buying stocks, and retaining ownership rights in companies, he continues to display his unparalleled intelligence for trading. Still, he continues to this day trading in the Japanese stock exchange and continues to make millions every year. But more than that, he shares the lessons and strategies that helped shape him to become the person he is today, the god of Japanese day trading.